Markets have steadied after a sharp drop on Monday, but what's supporting the rebound? We'll look at what's holding up sentiment, what it means for the U.S. economy, and how investors are adjusting from shifting strategies to renewed interest in gold, and what is moving the U.S. dollar. I'm Johanna Bota, and with me today is Global Head of Retail Dealing, Alex Ridgers. Alex, thank you for being here today.
Hello, Johanna.
So we saw some consolidation this week after a sharp drop in the markets on Monday. What is holding up the markets?
Well, I mean, the way I see it is we've come a long way. Very simply, the Nasdaq is down 18% from the highs. The S&P is down 14%. 14% historically for the S&P is huge, and we saw lows of 23%. So, in a sense, I think investors are now going, well, is this enough?
And there have been some rebounds, and it can't be as simple as what Trump says on the day. So, what is causing the rebounds?
Well, normally we have the case where news drives markets. Again, good or bad, that moves markets up and down. But we're actually getting to the stage now where rather than news driving markets, markets are driving news. Mm-hmm. So we've almost got this sort of starting to see this idea of a backstop where if the markets are crashing too much, markets move too much, Trump has to come out, change policy, have some positive wording. It has to say something right. So there's almost this way that now Trump is having to guide markets by policy and rhetoric. So in a way, we've got this sort of Trump backstop. And I'm sort of here today in a way to try and play devil's advocate a little. But if I was an investor, this idea of that if the markets get too bad, policy is going to change, that would make me very confident.
Okay, keep playing devil's advocate. What is going right in the U.S. economy?
Well, the IMF, they're come out this week and said everything's negative, growth is going to be worse. I mean, as someone that's lived in Britain all my life, whatever the IMF says, they're always negative and they always tend to be wrong. They always undergrade the UK. But when we look at their downgrades, so they've gone from 2.7% to 1.8%. And again, looking at that, saying, well, 1.8% growth, it's still 1.8% growth. That's still not that bad. It's not recession. Of course, there's a lot of negativity in the press at the moment, but 1.8% is a long way from recession. So is that really a cause for markets to be down so much?
Okay, so let's keep up with the optimism. Has all the recent chaos changed the way that, or have you seen a change in investment strategies?
Well, what I've noticed is, over recent years, we've had a very big switch from active investing, active being hedge funders, portfolio managers, choosing what stocks to get in, but particularly also the timing. Whereas passive investing, as an investor, you can invest in a fund and it will evenly distribute it across an index or portfolio. So I think we're going to see a real switch back to active investing because all these dips present a perfect opportunity to buy. And I almost think that this switch between active to passive investing in the recent years has actually increased index volatility by quite a considerable amount. Once we see the results of these sort of coming through over the next couple of months of the active strategies, I think we're going to see a big switch from passive back to active, which in a way could be a sign that we're going to start seeing that sort of reduced vol, more money, more cash sitting on the sidelines ready to step in when we do see these market drops.
Staying with passive versus active, what's your take on gold? Do you see it being used a lot more in investment portfolios in the future?
Well, so far this year, we've seen it as a real hedge against the dollar. We've seen gold as high as 3,500 only a couple of days ago. And I think that was almost not calling the bottom because we should never do that as an investor, but almost as thinking of gold as a high. We've seen in a day and a half, gold came off $200, which is almost unprecedented. And I think for me, that's just a little bit of a sign that maybe a bit like investors thinking, have we come too far? Gold's maybe sort of
reach its top?
Yeah, I think almost it's...
You are playing devil's advocate.
I think almost... Again, rather than saying where gold's going to go in the future, it's almost like the value that was there in gold has probably gone somewhat. So it might be that investors start to pull that back a bit from again what they're currently holding.
So can you give me a recap? As of today, how is the US dollar looking?
Well, the day before Donald Trump came to power, we had the dollar index sitting at 100. Mm-hmm. And I think what a lot of people now forget with the recent turmoil is the dollar index rallied from 100 all the way up to 110. So, a 10% move in the dollar is phenomenal in such a short period. And this week, again, at the lows, we've just touched 98 on the dollar index. So from 100 up to 110, down to 98. And again, there was a very sudden rebound, again, going that flavour of something feels slightly different here. Every time we've triggered major points like 3,500 in gold and 98 in the dollar index, we've had a strong rebound. So we're now sitting close to 100. So if you took us back to just before Donald Trump had won the election, the dollar is neutral. So in that sense, the dollar is not looking that weak. There's still many reasons, to feel that it's going to remain the dominant currency going forward.
So, Alex, what could move the US dollar?
We chatted last week about the dominance of central banks and how important they're becoming. So on one side, again, considering we are neutral to the Trump administration, let's call it that. On one side, we've got falling yields, falling interest rates, which means that we could see a further weakening of the dollar. But there's something to play devil's advocate on the other side of what caused the dollars to strengthen. The whole reason we saw the dollar rally from 100, the dollar index to 110, was because investors were so positive about Trump coming into power, which it seems a long time ago now. But at some point, Trump needs to reclaim that ground of being pro-business, pro-growth, sort of anti-regulation. So over the next coming weeks and months, if we see any sign that, again, he's going to go back to that and really sort of put that as his flavour of the month, then it could be an opportunity to see the dollar strengthen quite a bit. And further than that, I think that pro-business growth, more than anything, it could see investors starting to maybe question their decisions to start leaving the US and saying, well, maybe we need to come back to the US. And that will be very positive for both the US markets and also the dollar.
Well, thank you, Alex, for all your optimism. And thank you for watching. For more financial content, please like and subscribe to our channel. See you next time.